Rescuers are combing the Gulf of Thailand on the second day of a search for 29 sailors still missing after a Thai warship sank. The HTMAS Sukhothai carrying 105 crews sank off the southeast coast on Sunday night after losing power in a storm. Search teams have saved 76 people so far, including one man found on Tuesday after 2 nights in rough seas. The Navy has not disclosed if there were any fatalities. The Thai Navy and Air Force resumed the search on Tuesday with hundreds of officers on 4 Navy ships as well as several helicopters deployed to scan a vast 50 square kilometer area. A Thai naval commander had earlier suggested search crews had only a 2-day window to find anyone alive in the ocean. Life jacket, life buoy and their floating technique allow us 48 hours to save their life, Vice Admiral Pachai Lorchusikal said. Therefore, will be the highlight. We will try to do as much as we can to save them, he added. Several sailors have already been found, exhausted and some unconscious. We found this guy holding a life buoy. He was floating in the water for 10 hours, Captain Krapak Korawipaparwat of the HTMS Kraburi told Reuters. He added that the man, still conscious, had a minor head wound and sore eyes as he was exposed to sea water. Other sailors were found in a life raft after they jumped from the sinking vessel. The HTMS Sukhothai, a 76m long corvette, had been on day 2 of a routine patrol east off southeastern Thailand when it got caught in a storm on Sunday night. The Thai Navy said water flooded its hull and then the electricity room, cutting the power. Dramatic pictures posted on the Navy's Twitter account shows the vessel listing onto starboard side, before the vessel went under around 11:30 p.m. Sunday. Other naval ships were immediately alerted and sent to assist. But only the HTMS Kraburi frigate reached the vessel before it sank, about 32 kilometers east of Bang Saphon in the Prachuap Khiri Khan province. The Thai Navy said this was the first time it had lost a ship in such circumstances, and it would launch an investigation. However, naval experts have questioned how such disaster struck a ship on a routine parole. It's really unusual, said naval law expert David Letts, an associate professor at the Australian National University. The disaster striking at night meant it was also probable many sailors would have been asleep at the time, and the chaotic situation might have upended protocols like releasing life rafts. It's not yet known what caused the ship to flood, and why sailors were forced to jump into the water. The warship had been commissioned in 1987 and built in the United States by a local shipbuilding company, said the U.S. Naval Institute.
Bank of Japan shocks global markets with bond yield shift. Global markets were jolted overnight after the Bank of Japan unexpectedly widened its cap on 10-year Japanese government bond yields, sparking a sell-off in bonds and stocks around the world. In a policy statement, the BOJ said the move was intended to improve market functioning and encourage a smoother formation of the entire yield curve, while maintaining accommodative financial conditions. The central bank introduced its yield curve control mechanism in September 2016, with the intention of lifting inflation towards its 2% target after a prolonged period of economic stagnation and ultra-low inflation. An outlier compared with most major central banks. In contrast, other central banks around the world are continuing to hike rates and tighten monetary policy aggressively in an effort to rein in sky-high inflation. The YCC change prompted the Japanese yen and bond yields around the world to rise, while stocks in Asia-Pacific tanked. Japan's Nikkei 225 was down 2.5% on Tuesday afternoon. The 10-year JGB yield briefly climbed to over 0.43%, its highest level since 2015. U.S. Treasury yields spiked, with the 10-year note climbing by around 7 basis points to exceed 3.66% and the 30-year bond rising by around 9 basis points to 3.7%. Yields move inversely to prices. European government bonds also sold off, with Germany's 10-year bond yield adding almost 9 basis points to 2.2840%. The decision is being read as a sign of testing the water for a potential withdrawal of the stimulus which has been pumped into the economy to try and prod demand and wake up prices, said Susanna Streeter, senior investment and markets analyst at Hargreaves Lansdown. But the bank is still staying firmly plugged into its bond purchase program, claiming this is just fine-tuning, not the start of a reversal of policy. That sentiment was echoed by Mizuho Bank, which said in an email Tuesday that the market moves reflect a sudden flurry of bets on a hawkish policy pivot from the BOJ, but argued that the popular bet does not mean that is the policy reality, or the intended policy perception. Fact is, there is nothing in the fundamental nature of the move or the accompanying communique that challenges our fundamental view that the BOJ will calibrate policy to relieve JPY pressures, but not turn overtly hawkish, said Vishnu Varathan, head of economics and strategy for the Asia and Oceania Treasury Department at Mizuho. For one, there was every effort made to emphasize that policy accommodation is being maintained, whether this was in reference to intended as well as potential step-up in bond purchases or suggesting no further YCC target band expansion. The Bank of Japan noted in its statement that since early spring, market volatility around the world had risen, and this has significantly affected these markets in Japan. The functioning of bond markets has deteriorated, particularly in terms of relative relationships among interest rates of bonds with different maturities and arbitrage relationships between spot and futures markets, it added. The central bank said if these market conditions persisted, it could have a negative impact on financial conditions such as issuance conditions for corporate bonds. Luis Costa, head of CEEMEA strategy at Citi, indicated on Tuesday that the market move may be an overreaction, telling CNBC there was absolutely nothing stunning about the BOJ's decision. You have to take this BOJ measure in the context of a positioning in dollar-yen that was obviously not expecting this tweak. It's a tweak, he said. Japanese inflation is projected to come in at 3.7% annually in November, according to a Reuters poll last week, a 40-year high. Costa said the Bank of Japan's move was not geared toward combating inflation but addressing the infrastructure and the dynamics of JGB trading, and the gap in volatility between the trade in JGBs and the rest of the market.
Stock futures fall slightly as Wall Street struggles continue. Stock futures slipped Tuesday, whipsawing after an announcement from the Bank of Japan as traders fear a year-end rally may not come to fruition. Futures tied to the Dow Jones Industrial Average were down 34 points, or 0.1%, by around 5:25 a.m. ET, having earlier been down more than 200 points. S&P 500 futures and Nasdaq 100 futures fell 0.2% and 0.4%, respectively. The Dow on Monday shed more than 162 points, or about 0.5%. The S&P 500 fell 0.9%, and the Nasdaq Composite lost nearly 1.5%. Stocks are on track to end the month and the year in the red, and investors' hopes for a Santa Claus rally are fading fast. There's still no Santa sighting. Buckle up, said Louis Navelier, founder of growth investing firm Navelier and Associates. One would like to think all the bad news is in. There are no more Fed moves until February at the earliest. We're not gapping down, but certainly not clawing back last week's losses. Fears that the Federal Reserve could tip the economy into a recession plagued investors. Last week, the central bank raised its benchmark interest rate by 50 basis points, and policymakers indicated the terminal rate could rise as high as 5.1%. Other central banks in hawkish mode put further pressure on traders, with the European Central Bank raising rates and its outlook for further hikes last week. Overnight on Tuesday, the Bank of Japan moved to widen its cap on the 10-year Japanese government bond yield, catching traders around the world off guard. We think we're close to the end of these rate hiking cycles, which could lessen the headwind we've seen on global financial markets this year. A handful of big companies will report their quarterly results this week ahead of the Christmas holiday. General Mills will report before the bell Tuesday. Nike and FedEx are set to report after the bell. In economic data, housing starts data for November are due Tuesday morning. This week promises lots of insight into the housing industry. Sales data for existing homes and new homes will be released Wednesday and Friday, respectively. November's personal consumption expenditures report, a preferred measure of inflation for the Fed, is due on Friday. Bank of Japan holds rates steady, widens yield curve control band. The Bank of Japan held its benchmark interest rates steady and announced it will modify its yield curve control band, the central bank said in a statement. The BOJ will expand the range of 10-year Japan government bond yield fluctuations from its current plus and minus 0.25 percentage points to plus and minus 0.5 percentage points, it said. The adjustment is intended to improve market functioning and encourage a smoother formation of the entire yield curve, while maintaining accommodative financial conditions, the BOJ said. The Japanese yen strengthened more than 2% to stand at 133.37 against the US dollar after the announcement. The days of the Fed put are behind us, says Verdant Swornman. Historically, the market could count on the Federal Reserve to step in with easy policy to help limit big losses in equities, which has been known since the days of former Fed Chair Alan Greenspan as the Fed put. Those days may be over now, however, thanks to inflation that's expected to remain higher than it's been over the past decade and a money supple near record highs, according to Megan Horman, Chief Investment Officer at Verdant's Capital Management. There is still too much liquidity that needs to be drained, she said. This means that the days of the Fed coming in and cutting rates to zero at any sign of economic weakness are behind us. Instead, expect more volatility in economic growth and potentially more frequent mild recessions over the next decade. Fuel cell rises after hours. Stock futures opened little changed on Monday evening. Dow Jones Industrial Average futures were lower by 18 points, or 0.05%. S&P 500 futures were down by 0.07%. Nasdaq 100 futures slipped by 0.05%.